All right, so you can see we are in a short. We had a short-term high here. They dropped away from, creating that low. That's the next draw on liquidity right down here at 21,877.75. And as it was rallying above, I was establishing a short, scaling in, using the rejection block in this high here as it was trading above it there, and adding more to it as it was working above the old high in here. And then one more time as it was trading above that high here, I was watching it and trying to build a larger position. Then we had a shift in market structure below that low, or lows, when price went down to this low, reacted off of this bullish fair value gap, traded up into, as you can see presently, it's inside of the SIBI, which I added more to. So this candlestick's low, this candlestick's high. You can see that all of the bodies are respecting the midpoint of that sell sign and balance, buy sign efficiency I have noted in red. You see that? So I want to see at this very moment, I can already hear you guys bitching. Should do this live. It is live. That minor sell side liquidity pool, that I want to see it draw down here quickly. So draw down to it fast and have no problem at all getting through the consequent encouragement of that wick and getting below 21,884.5. Okay, it should start to accelerate lower. Now, if you notice, there's a small little volume imbalance right there. And since it's formation, we've seen it use it on the basis of delivering buy side, running up. So now I want to see it be utilized as a premium array. Look at that. It's almost like I know what I'm doing. Or I got like remote control. Or do I? So again, our interest is that right there. We want to see it do that very thing. And it doesn't need to go back out to that volume imbalance, but I was making an allowance for it should it do so. So that way we can follow along. And we want to see it trade to 21,877.75. I can pair some of this risk. Actually, let's just go cover the costs. All right, so we have another volume imbalance in here, right there. So watching how price utilizes that area for order flow. We have a volume imbalance there. And the one I just noted up here, which get that out of the way. So a little bit more real estate on the chart. Earlier I talked about how it could use that new week opening gap high and like try to rally up, but have a limited upside. And if we look at this low here at 21,859 even, that's the next draw on liquidity. And then we have the relative equal lows I mentioned inside of new week opening gap. That's what I wanted to do. My drawing tool there. There's a sell side, minor sell side. And in the lower quadrant on the new week opening gap is there. So we'll see what we get in regards to that. It's really nice reaction off of that. Now, the underlying narrative is what I'm using here to frame this. The market used new week opening gap high to accumulate all this. Rallied up, created the short-term high, dropped down, created a short-term low, and then here's where retail Rick comes in. They want to see a strong rip above that short-term high, and when it does that, they think that this was a low. Here's a high, here's a low, so it's a 1, 2, 3 bottom. It's therefore the market should go higher. Now they want confirmation. They don't want to just go in on that. They don't want to buy at the lows. They want to buy at the highs. That's what retail logic forces them into doing, because they're weak-minded. They lack discipline. They have no convictions in their trades, and they want quote-unquote confirmation. Confirmation would be to see what? They want to see this high broken to the upside, because they see that as resistance broken. So they want to buy on what? A breakout. And that's why all that buy stop liquidity here, or buy side liquidity, I'm fading that. I'm selling right into that. And then when we have our market structure shift, below these lows here, with this move down here, then we retrace back up into the sell side imbalance, buy side inefficiency is highlighted here. And the bodies respect what? The lower half. Sure, we get one candle or two that shows their wick. That candle and that candle's high wicks above the consequent encroachment of that sell side imbalance, buy side inefficiency. But that's permissible. I'm not sweating that. It's normal. So your stop loss has to always make an allowance for that. And then when we took out this low, and I told you I wanted to see it accelerate, once we had this little touch right here of the SIBI, it's this right there. Once we get that, I wanted to see it sell off and aggressively run for this low. And we've seen that. And we have this sell side imbalance, buy side inefficiency with the volume imbalance that price is utilizing right now. So let me just add that. And we'll put the consequent encroachment level in it. And again, same premise. We want to see how price focuses on keeping the bulk of the volume, which is encapsulated inside the bodies of the candlesticks, and permitting the wicks to traverse into the upper half. We don't want to see closings of up close candles in that area. We want to see it do what it's doing right here now. I want to see it accelerate through that, or just stay in the lower half of this SIBI. Again, we're aiming for 21,877.75 as a first partial.